IRSO, International Revenue Service, states in its requirements that S-Corp owners are entitled to a reasonable salary. But how exactly do we decide what counts as a reasonable salary? One of the main reasons for starting an S-Corp is for its tax benefits. So it's crucial to get this right. We'll be discussing what is an S-Corp and what are the requirements, how to pay yourself in an S-Corp, what counts as a reasonable salary in an S-Corp, how you decide on a reasonable salary, how to pay taxes on your S-Corp salary, examples of salaries. Is an S-Corp right for you? Before getting started, leave a like and subscribe for more educational content like this one. Now let's get to it. What is an S-Corp? So how do we define an S-Corp? An S-Corp is a tax designation that can be selected by a corporation or LLC, a limited liability company. There are certain requirements you have to follow for your business to be counted as an S-Corp. They are: your business must be a domestic corporation or an LLC. It has a maximum of 100 shareholders if it is a corporation. Shareholders must be legal US citizens. All shareholders must be private individuals. Number 2. How to pay yourself in an S-Corp? Owners along with the members, they are considered employees in an S-Corp, which means that they are paid a salary. But here is what's cool. They also have the chance to receive distributions from the company. What's the difference between a salary and a distribution? Let me explain. A salary is the money or wage that you pay yourself as the owner and what you pay your members for the time and effort put into working for the business. This wage is liable for employment and income taxes. Distributions are the profits and losses that are passed on to all the members of the S-Corp. What sets distribution apart from the salaries is that distributions are subject to only income tax, not employment tax. While you don't have to pay taxes on your distributions, you are required to pay a reasonable salary before taking distributions. But that doesn't mean you take a ridiculous small salary so that you can collect more in distribution. Let's look at an example of what the tax flow on an S-Corp that makes $100,000 in an annual profits would look like. As you can see from the chart, LLCs and corporations can be benefit from the tax advantages of an S-Corp. But in doing so, they must be sure to adhere to the rules of the IRS. Number 3. What counts as a reasonable salary in an S-Corp? Owners and members of an S-Corp must earn a reasonable salary. In essence, this is the amount of money an S-Corp members must receive for the time and effort they have put in towards working for the business. But how does the IRS define the term reasonable? The IRS states that a reasonable salary has to reflect market standards and should be at the same level offered to someone else who was doing the same job as you. This essentially means that your salary should be at a comparable level to what other employees in the same field and industry are receiving for performing similar roles. Keep in mind that your salary is subject to income tax and employment tax. While you may be tempted to pay yourself a smaller salary and take larger distributions in order to pay less taxes, the IRS keeps a keen eye on such areas when it comes to S-Corps. Note that even if it was an accident, misfiling can lead to back taxes and penalties. Additionally, the IRS also has the ability to tax your distribution as a salary. Before we take a look at what a reasonable salary is and S-Corp is, let's take a look at some exemptions where you don't want to pay a reasonable salary. Exemptions. By definition, you probably assume that a reasonable salary is the amount of money you pay to a person that's equivalent to the work they have done, whereas distributions are given according to the profits and losses of the company. However, there are some exemptions where you don't pay a reasonable salary to members of an S-Corp. You are not required to pay a reasonable salary if you are not taking distributions. You can't pay yourself the full reasonable salary. For instance, if your net profit is less than the amount of your reasonable salary, then you have the option of not taking a distribution and just receiving your salary until you reach the reasonable requirement level. Additionally, you can also choose not to take either a distribution or a reasonable salary. However, you have to remember that if you want to take distributions in the future, You will have to pay yourself a reasonable salary to compensate for the time period when you did not take distributions. Number 4. How do you decide what's a reasonable salary? The IRS instructions are a little hazy on this aspect, but we have compiled a list of several factors you can use to decide what a reasonable salary is. Here is what you might want to take into consideration: the responsibilities and duties that are being carried out, the level of education and training of the member carrying them out, the amount of time you or other owners have been working in the company, your dividend history. Look into comparable salaries for businesses in the same industry. Check whether you or other members will be a part or full-time employee. Factor in the location of your business, as things like cost of living differs from place to place. Resources to use to decide on a reasonable salary. To determine what a current market value is for your job role, you want to look into what other businesses in the same industry pay their employees with a similar job as you. Fortunately, there are several resources you can use to easily check this information. Here are some of them. Glassdoor, an online site where people can view and review information related to jobs across various fields. It shows company salaries posted by both current and previous employees. With this information at your disposal, you can decide on a reasonable salary for yourself. The Bureau of Labor Statistics, a government website with salary data from all over the US. You can search by job characteristics and difficulty, state and industry in order to get the information you need. You can also talk to a compensation consultant. This is a person whose job is to figure out the appropriate compensation for workers. They research wage statistics and trends so you can be sure your information is correct and updated. There is one more way to decide on a reasonable salary, which you may have heard of already. Let's talk about the 60-40 rule. The 60-40 rule. This rule refers to the concept of taking 60% of your revenue as a salary and the other 40% as distributions. Although this may seem like a good idea, you have to keep in mind that this is more of just a haphazard formula. The IRS doesn't accept the justification of your salary using the 60-40 rule. While this may seem like an easy way to pay yourself a reasonable salary, it's better to consider taking the complex factors that decide your salary and calculate your reasonable salary using the methods we talked about previously. Number 5. Salary taxes. You have now calculated your reasonable salary in an S-Corp. But how do you pay taxes on it? Just like for other salaries, you have to pay income taxes on the salary you receive from your company. You also pay payroll taxes or self-employment taxes on your wages since you are a shareholder as well. You might also be wondering what your S-Corp can expect to file in terms of taxes. This includes W-2. This is a wage tax and statement. It gives information on employees' income and all taxes taken from their salary. Schedule K1. This is the shareholder's share of income, deduction and credits. This shows how much of the profits each owner is given. Form 1040. The US individual income tax return. This is your personal income tax. Additionally, on your individual tax return, you will have to use your W-2 to report on your S-Corp salary. Use Schedule E of your personal income tax return to report and pay personal income taxes on distributions. From the company's perspective, they would need to file Form W-3, which is the transmittal of wage and tax statements. This outlines an employee's W-2 for the Social Security Administration. Form 1120S, which is the US income tax return for an S-Corp. This is a report of the business's income, profits and losses, tax credits and deductions. Form 941. This is the employer's quarterly federal tax return. It is filed every quarter of a year to report taxes associated with employees. Form 940. This is the Federal Unemployment Tax FUTA return. This is for filing and reporting federal unemployment tax FUTA. Phew, wasn't that a lot to take in? Now let's look at some examples of salaries to help you understand everything better. Number 6. Example salaries. Now that we have discussed some guidelines to use when deciding on a reasonable salary, let's look at some examples of how you can decide on a reasonable salary under different circumstances. First, let's look at a higher net profit business. Say you are an employee of a digital marketing company. Your net profit is $125,000. The average salary of a digital marketer is around $60,800 annually. In this instance, you decide to pay yourself $65,000 for your salary and take a distribution of $60,000. Now, let's look into a lower net profit business. Say you are the owner of a programming S-Corp. Your profit is $70,000 per year. A programmer's average salary can be $76,150 per year. Since your profits can't give you a reasonable salary, you choose to take $71,000 in salary and nothing in distribution. While this amount doesn't meet the reasonable salary standard, you will be okay since you are not taking distributions. There is the option of leaving all the money in your business and not paying yourself, but you would need to make up for this by paying yourself in the future. Number 7. Is an S-Corp right for me? Here are some factors to consider before choosing an S-Corp tax designation. Can provide tax benefits and tax savings for an LLC or corporation whose net income is higher enough to pay its members a reasonable salary. Any leftover profits can be taken as distributions and can be used to lower your overall tax burden. S-Corps requires you to file additional forms at the end of the year, which will be scrutinized closely by the IRS. This is why you must hire a professional accountant to maintain diligence. Conclusion. We hope you learned something from this video. Don't forget to leave a like if you found the video helpful. Comment below if you have any doubts and subscribe for more videos like this.